A lot of interesting discussion happens over on X, and Gary Black is one of my favourite windows into the thinking of traditional investors, particularly when it comes to Tesla and autonomy. Today we're going to read this thread. Gary posts, when will Tesla remove safety monitors from Austin Robotaxis? It will be 2 months next week since the Austin Robotaxi launch. Tesla likely can't go higher until investors see clear progress on unsupervised autonomy, management's promises notwithstanding. And meanwhile, Uber, as in stock, continues to hit new highs. Uber up 54% year-to-date versus Tesla down 18% year-to-date as Uber remains best positioned to take advantage of the shift to unsupervised autonomy. So predicting what a stock will or won't do is pretty high-risk business. That said, Gary believes that Tesla stock likely can't go higher until quote-unquote investors, typically the kind that wear suits, see clear progress on unsupervised autonomy. And I believe what Gary is suggesting here is, say, for example, the people in Austin who are sitting in the passenger seat doing literally fuck all while the vehicles drive themselves around. Many traditional investors don't have enough imagination to imagine if they disappeared tomorrow. And therefore, while there's somebody sitting in the passenger seat doing approximately fuck all, they can't actually watch the vehicles themselves driving from point A to point B intervention free. Therefore, just wait and see. Now, this is one approach to investing. It's called miss the fucking boat every time. Now, I'm not hating on Gary. I think his reasoning is actually probably on point. A lot of deep-pocketed, big institutional investors, money managers and so on. Oh, there's somebody in the passenger seat. It technically doesn't count as a robotaxi yet. I need to wait until the person disappears from the seat. But as I've said in the past, I really do believe investing is about identifying opportunities before they're obvious to everybody. And it's crazy enough as this sounds, once Tesla does remove the person in Austin from the passenger seat who's doing nothing, then it may become obvious to people, oh, there's nobody in the vehicle other than the passenger. Therefore, now it's technically a robotaxi, even though they could have watched videos of these things or taken a ride themselves and seen the actual capabilities for the last almost 2 months. Now, regarding the comments about Uber, not the stock or Tesla, who cares what the stocks are doing over the short or even medium term. But Uber remains best positioned to take advantage of the shift to unsupervised autonomy. This, to me, is a fairly remarkable statement. If, and this is a big if, and it's hypothetical because we exist in reality, not hypothetical land, but if hypothetically Tesla didn't have the full stack, wasn't fully vertically integrated, and didn't have a massive cost advantage in terms of hardware on roads, plus the massive scale advantage, plus the manufacturing advantage, plus the best software generalized solution, no one else has that. If none of these things were true, and Tesla just happened to be one of the many companies, say for example like Waymo, paying another company to produce a vehicle, covering said vehicles in butt-ass ugly sensors, and all of the companies like Waymo and this pretend Tesla, the hypothetical Tesla that doesn't actually have massive advantages, cost advantage, scale advantage, were all just trying out their own autonomy services here and there and had no possible chance of reaching scale without partnering with Uber. E.g., if Tesla would need to use the Uber platform to offer robotaxi rides and would have comparable pricing to all of the other companies that would need to use the Uber platform, Gary would have a point. But we live in reality and therefore he doesn't. Now, in fairness to Gary, companies that aren't Tesla and haven't fully vertically integrated and don't manufacture vehicles at scale profitably and don't have a massive cost advantage and don't have a generalized solution to autonomy are likely to utilize a platform like Uber. Try to increase the number of rides they're giving to customers. But here's a problem. While this is happening, while the dinosaurs are clamoring to get on the Uber platform, Tesla's going to be scaling their own fleet of autonomous vehicles with a massive cost advantage and priced as competitively as they can without wait times becoming too absurd. So I think a more correct statement would be Uber remains best positioned to take advantage of all the companies desperate to scale their own robotaxi fleet with massive cost disadvantages while Tesla puts them out of business, and therefore many partnerships will be announced, but all these companies are ultimately fucked. Of course, the counterpoint would be I'm just a deluded Tesla fanboy and I can't see clearly, but I still have yet to see anybody show the math how any company that isn't Tesla is going to be able to compete with Tesla on cost per mile for their robotaxi service. And if none of these companies will be able to compete with Tesla on cost per mile for their robotaxi service, just like today, there's not a single company at all, even in China, that appears to be making any money selling electric vehicles except for Tesla, then I only see this ending one way. Tesla takes the lion's share of the profits here. A few companies carve out a niche, positioning themselves as super high-end, ultra-premium, charge enormously above what Tesla is for cost per mile and have a very tiny market. But Tesla eats up the entire opportunity. But again, back to Gary's point. He truly believes that Tesla stock probably can't go higher until investors see clear progress on unsupervised autonomy. I would also add that, tacit in this statement is the fact that today, quote unquote, investors can't see clear progress on unsupervised autonomy, even though Well, we've got hundreds, thousands of end-to-end trips, videos everywhere, people in Austin and elsewhere. We can watch what the software is doing. We can see the rate of progress. A couple of years ago, this stuff, constant supervision, ready to intervene at any moment, lots of interventions. Today, barely any, if at all. The progress is there if only you open your eyes and use your brain. But of course, as many of you guys know, in the traditional investing world, it is literally illegal to demonstrate any courage. Testicles are banned, you see. So if you go out on a limb and say, well, I can actually see footage of these things. I've seen people in them. I've seen the vehicle drive itself. Point A to point B, zero interventions, 2 miles, 5 miles, 10 miles, 50 miles, 350 miles, LA to San Francisco. I can see what the software's doing. It doesn't matter whether or not somebody's sitting behind the wheel doing nothing or in the passenger seat doing nothing, or they're tied up in the front doing nothing. I can see the actual software. I can see the progress. This is obviously working. This is obviously going to scale. It's obviously a generalized solution. This is a big fucking deal. But it's illegal to have that level of courage on Wall Street because you'll get permanently banned for participating in your industry. If you're ever wrong, a little bit too early, a little bit too bullish, a little bit too aggressive. Therefore, it's better to be late to the party than arrive a little early. So I'm looking forward to reading some of the comments and interactions here. Typically, a lot of Tesla fanboys, and I do mean fanboys, tend to be very emotional and very unreasonable on Gary. He's doing his best here. I disagree very strongly with some of his opinions, but I'm sure he would say the same of me. But Gary does, at least to his credit, tend to engage in discussion. So let's see what we can find. Keeping in mind, I'm sure these comments and replies will be a little bit tailored to the algorithm based on me. First comment I see here is from Jeff, very large brain Lutz. Shout out to Jeff, who says, how does removing safety drivers impact time to volume deployment and time to peak revenue? Hint, the question goes beyond basic surface level observations. Gary responds with a lengthy one. State regulators generally require manufacturers, I always almost think this says motherfuckers, something wrong with me, to attest to level 4 or level 5 autonomy, aka take full liability for any accidents. It's not so much what can the software do, it's who's liable when it makes a mistake. To be granted Robotaxi deployment licenses. States also require manufacturers to assume liability for injury or damages to be... this is essentially the same thing here. So far, Tesla has only applied for autonomous testing permits. To me, if Tesla vehicles require safety monitors in every vehicle, it's an acknowledgement that they aren't yet at level 4/level 5. Now look, it's obviously worth paying attention to safety monitors and or a lack thereof. But what's even more important than that is to actually watch what the software itself is doing. Again, I reiterate, in Austin, where Tesla first launched this service, there's nobody behind the wheel. Tesla has an employee in the passenger seat, likely there in case of absolute emergency. But they can't grab the wheel, slam on the brakes, accelerate out of danger. That in and of itself showed Tesla's confidence in the capability of the software. They're being extremely cautious, as they should with this rollout, for two reasons. One, safety is the number one priority. And two, the first safety critical incident that occurs is going to be front page news for a century because it's Tesla. As soon as all of the journalists are finished jizzing, they're going to whip out their pre-prepared article, Tesla crash disaster, unsafe, Elon bad, remove autonomous vehicles from the roads. And they'll have a field day, maybe a field year. So it's a good question to ask, but far more important to is actually just watch the software itself operate, right? Watching the software operate tells us everything we need to know about its actual capabilities, e.g. what can the software do, as opposed to focusing on when Tesla decides to take responsibility, be completely liable if there's an incident, nobody there in case of emergency. These are very different things. Gary points out that while there's a safety monitor, essentially, it shows that Tesla isn't 99.99% confident their vehicles can drive themselves without supervision. Also adding that they can't yet scale up because they would exponentially increase their liability with 1,000 cars versus their current Robotaxi count of apparently 20. Jeff responds, in my opinion, the approach is to get to scale, and there are several vectors to manage, including public perception when launching a safety-critical consumer product. Now, this is very true. Like I said, the first incident, shit'll hit the fan. He continues. Also, many states, like California, have requirements prior to granting those licenses, whether the product is SAE level X or Y. Jeff goes on to point out some of the distinctions regarding the different levels of autonomy. Again, the whole thing's a bit of a trick, a scam, misdirection. Just watch the fucking software. It's really all about who's liable for what. Tesla recently posted a full trip, intervention-free, Los Angeles to San Francisco, right? 6-7 hours trip. 0 interventions. There was somebody sitting in the driver's seat doing nothing. DMFs would refer to, well, if somebody was sitting there, technically this is only level 2, right? But people who think a little bit deeper would watch the video itself, watch the trip, realize there's 0 interventions, and if the person were not in the driver's seat, the trip still would have taken place. 0 interventions, 0 incidents, safely. Jeff also adding that if he's Tesla, he's going to keep the safety riders in as long as possible. Notice, by the way, safety rider, not safety driver. Good distinction. as long as possible, especially during the transition to a major new FSD version like V14. Good points here from Jeff. Again, it's in Tesla's best interest to be ultra conservative with this rollout. First incident, shit hits the fan. Headline news. Some more back and forth, and Jeff, this sentence really sticks out. It won't be with a safety rider at full scale. And there's no reasonable math that shows Uber crushing Tesla on cost. And yeah, exactly. This is really important. I haven't seen a single person make a logical case for why companies offering a Robotaxi service on the Uber platform will be cost competitive with Tesla when, one, Uber's obviously going to take a cut. They're not a charity. Two, none of these companies produce their own vehicles. They have to buy them off some other company who also aren't in the business of charity, therefore they're going to be making a profit. And even if these companies were manufacturing their own vehicles, Tesla's the only company on the planet who actually makes a profitable electric vehicle at scale. No one has been able to explain to me how any of these companies will sustainably compete with Tesla on cost per mile. Now, caveat, if Tesla's goal were to milk maximum profits over the short term and it wasn't to accelerate the world's transition to sustainable energy, Tesla could actually charge quite a premium per mile, make stupid profit margins. And in a situation like that, some companies offering a comparable service, even if their hardware costs were massively higher than Tesla's, could, in theory, charge a comparable price per mile and make a very small profit, but only if Tesla's intent was to milk maximum profits. But their mission statement makes it extremely fucking clear, brother, that they will drive their cost per mile down as fast as possible because it's directly in line with their mission of accelerating the world's transition to sustainable energy. More miles in electric vehicles equals less miles in internal combustion engine vehicles, directly in line with their mission. It is so obvious that Tesla will drive their cost per mile down as fast as they reasonably can. They will make a profit doing so, but they're not going to maximize profits. They're going to maximize miles driven in electric Tesla Robotaxis. Again, please refer to the mission statement. So to Jeff's point, I've yet to see the math. It doesn't exist. That's why a logical argument how these companies would compete with Tesla in that situation. They can lose money per mile for a while, but at some point, you just got to pull the plug. All right, back to the post. Let's read some more of the comments. Kyle asks, Gary, sorry to ask, serious question. Can you explain how Uber gets to full autonomy? I'm struggling to understand because they don't have any vehicles as such and no data from vehicles which they don't own. In addition, do they train any AGML? Yeah, so Kyle's question here, Uber themselves, obviously, I mean, Gary definitely wouldn't assume that they're going to be solving autonomy themselves. So let's see Gary's explanation here. Through Uber's multiple fully autonomous partners. And here we have a screenshot with Waymo circled. Uber partners, Waymo, WeRide, Pony, Baidu, AV Ride, Neuro, Aurora. We get the picture. Lots of logos of companies who are attempting to and or have quote-unquote solved autonomy. Let's also circle all the companies here today that make their own vehicles. Oh, wait, that's awkward. We've got Tesla over here. And then of the companies that make their own vehicles, oh, wait, it's only Tesla. Which of them actually makes them profitably at scale? Oh, that's only Tesla. Okay, so that's interesting. And which of these companies already has massive scale? That would be Tesla. Which of these companies produces thousands of vehicles per day globally? That would also be Tesla. Which of these companies has a generalized solution to autonomy? That would also be Tesla. This is getting rather awkward. Now, again, to be clear, and to Gary's point, these companies, I mean, there's got to be lots of partnerships announced. I don't care about partnerships. I care about, can any of these companies on the Uber platform sustainably compete with Tesla's obviously rapidly declining cost per mile, driven by their massive cost advantage in autonomy? Answer is no. A few people seeming to be confused by Gary's comments here, thinking that he was suggesting Uber themselves will be solving autonomy as opposed to partnering with companies who themselves are trying to solve autonomy and will offer their services on the Uber platform. Just remember, the more partnerships involved, the more messy, and everybody wants a cut. I found one skeptic in the comments. It is impossible, strong word, to remove safety monitors. There are too many interventions. And yeah, tell that to the Robotaxis in Austin. Doesn't even have anybody behind the fucking wheel. And Tesla does not have any other risk mitigation. I can't imagine. Texas Department of Motor Vehicles, yeah, would allow it. Bro, they're operating Robotaxis in Austin right now. There's nobody behind the wheel. Tesla's an employee in the passenger seat. Oh, wow. Peter writes, the thing I like is Gary is long Uber. He's not just talking. He has a stake in it. And by the way, totally agree with this comment. Gary believes what he's saying. And I believe that the odds of Uber still being a solvent business about a decade from now are close to zero. Now, before we wrap up, I just wanted to share a post from Brett Wynn of ARK Invest all the way back in May, who's fully based now, and I am all for it. After discovering Waymo's new Robotaxi upfit facility, e.g., they get a vehicle from another company, they pay a fuckload for it, and then they cover it in butt-ass ugly sensors. Right, that's where they do the butt-ass ugly sensor outfit. The upfit facility. Waymo's new Robotaxi upfit facility set to produce 2,000 units this year. Wow. That's as many as Tesla produced checks notes today. Checks notes again. Before lunch. Oh, shit, dude. I've made this argument many times, but it's worth emphasizing. Even if Tesla didn't have a generalized solution to autonomy, even if they didn't have a massive cost advantage for the actual hardware, both of these things are true though. If the only thing that Tesla had in terms of an advantage was their ability to produce as many vehicles as Waymo's new facility will do in a year, in the first half of a fucking day, if that's the only thing that they had in terms of an advantage, their ability to mass produce autonomous capable vehicles at a rate not 5 or 10, not 20, not 50, more than 100 times faster than next best, if all other things were equal, and Tesla had just this one advantage, they would still win. Do you understand? Want more content? Early access? Bunch of perks? Click the links in the pinned comment. AG1 is awesome. I've been taking it daily now for more than 3 years. It's a great way to fill in nutritional gaps. It's packed full of vitamins, minerals, and whole food source nutrients, plus has prebiotics, probiotics, and adaptogens to improve gut health, regularity, and help your body handle stress. I'm always looking for an edge to help me feel and perform my best, which is why I haven't missed a day of AG1 for more than 3 years. Just try it and see how you feel. Click the link in the pinned comment or head to drinkag1.com/SMR and get yourself a free 1-year supply of vitamin D3 plus K2 and 5 travel packs.